What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic, and we've made it our mission to help you own it. And Fat Man Zoom, what are we talking about today?
So today we're talking about the top recovery stocks. The Chaos crew has spoken. We did a poll, and they want to know what the top 5 recovery stocks are going into 2021. We have the vaccine that was just distributed today, and it looks like we're moving towards getting back to work, getting back out there. So we're going to do those top 5, and we wanted to bring stocks that aren't just your run-of-the-mill, just everybody knows. We wanted to bring something different, so we're going to do top 5.
Yeah, so my first one, just to kind of get the ball rolling here, is going to be Spirit. Now, I know that we've talked about Spirit quite a bit on this channel, but if you're visiting for the first time and you never heard of Spirit, I want to make sure that you're not thinking that I'm talking about Spirit Airlines. This is Spirit AeroSystems, and this is actually the company that was spun off from Boeing that constructs the fuselages, all kinds of other parts for the MAX 737 or the 737 MAX, and but it's not just Boeing that Spirit AeroSystem services. They also service Airbus and some other competitors as well to Boeing. So this is just going to be a really great move for Spirit. I think that it's the move is just getting started for this company, and we can see that it's had a little bit of a pullback. I'm going to actually share my screen with you guys here via our Webull account. You can actually see that this is pullback. I think this is going to be a really good opportunity to scoop up some Spirit. I'm looking right now, if I go back out to the daily chart here, I'm looking at possibly $37, $36 a share right now. I think 34 is probably going to be an opportunity to potentially grab the dip here, because if you look at the potential upside, you know, the MAX 737s were grounded about 20 months ago, and about 20 months ago, Spirit was trading at around $94 a share, as you can see. So now that we're finally starting to get the ball rolling here, we're starting to see orders come in. In fact, about a week ago, last Wednesday, Brazil actually flew its first commercial flight, paid passengers, everything. MAX 37, that was a great step forward. We're seeing orders come for Spirit AeroSystem. This is going to be one that still has plenty of upside, so grabbing the dip down here makes a ton of sense, and we think going into 2021, this is going to be an amazing stock to hold on to.
Yeah, and I mean, we still feel really good about the airlines, but as you said, as far as from a manufacturing perspective, you have this depreciating asset, and the planes come first.
Right.
So I think it's a great hedge. I think it's a great call on you. The next one we're going into is another well-known name or big player, which is MGM. So MGM Resorts is one that we've been hollering about since the teens, and we love this stock, and I'm going to tell you why. Currently, it sits at about $30, just under $30. And I know a lot of people have asked, is the move made? Because really, it's gone up 50% in the last 6 months. It's still about 10% off the year-to-date highs. But if you look back, really it looks like one could make the argument that it's not going to get above $40. I don't agree with that, because they have the opportunity in online gaming. Now, still not better than our favorite Penn, which is absolutely going bananas.
So what a monster
MGM
today.
is a great hedge for this.
Yeah.
Now, BetMGM, when you think about all the brick and mortar casinos, it has the best chance to enter into that space and compete and stand side by side with the likes of DraftKings, Penn, FanDuel. And don't be surprised if one of these casinos actually buy them. But moving into it, I think BetMGM has a great opportunity to take market share. It's actually about to move into Pennsylvania. It's going to be a part of Michigan. And as we said with online gaming, there's going to be 10 plus states next year that add online gaming, and I think they're positioned to do well. The other big reason that I really like MGM is because of the opportunity as we reopen, not just in Vegas, not just in the U.S. domestically, but really in Macau. And I don't think a lot of people know enough about Macau. Macau is off the coast of China. It's a part of China. And Macau is essentially the Vegas of the East. And on top of that, it's just bigger. And there's more money changing hands. It's insane. So when that really reopens, which it has opened, but it hasn't seen the traffic, when we see that traffic flowing through, you're really going to see the numbers of their balance sheet go up. We've talked about their P&L. They freed up some cash, and they're in a really good position to bounce back and to really, this sounds crazy, their '07 all-time highs of $100, nearly $100, that could be in play the next couple of years.
That would be insane, bro. When you look at MGM, and to your point, and we actually talked about this with Penn a little bit, because Penn National today, as of this recording, made a monster move. We think that, the betting side of things, as far as online gaming is concerned, betting side of things, but as far as online gaming is concerned, that's been kind of what's helped MGM kind of get up to this point. And now that they're opening up their physical locations again, it just only adds value to that. So if the Rona had never been here and MGM was sitting where it was at pre-crash, then added online gaming, where would it then be? And so I think that that's the level of thinking that we have to have when looking at something like MGM and some of the other gaming sites or gaming platforms that we've been looking at. You have something like DraftKings, which isn't really something that you could compare apples to apples to, especially with Penn National and MGM, because they have physical locations as well, whereas DraftKings just doesn't. So there's definitely some really good opportunity. We love MGM because they have one of the best balance sheets in the industry. They're also, their insiders have also been adding tons of cash to this as well. If you look at some of the Form 4s, they are sitting pretty, it's just unbelievable. I think we see really strong moves out of MGM. Great call on that one, my man. The next one for me is going to be Salesforce. Now, you might be asking yourself, well, wait a minute. Wasn't Salesforce like a good remote work play and not really so much of a vaccine recovery type play? And that's where you would be wrong. And if I may, direct you to work.com. I'm actually going to share my screen here with you and show you work.com. This is actually Salesforce's website to mobilize, manage, scale vaccine administration efficiently and effectively, as you can see here on their header. And this might be something that people just don't realize. And I think that we're actually seeing that because with the vaccine news coming through, CRM or Salesforce has not moved a whole lot. But I think that once people start catching wind of this a little bit more, and instead of just equating this to nothing but a remote work play, I think that we see a really good move on this. Now, if I look at the chart here, and I'll go ahead and pull this up, we're looking at the weekly chart here, but I just want to kind of give you some perspective. It looks as if that perhaps there is a support down here at 211, but I doubt we see that, because if we come back out to the daily chart, it is held remarkably well at 220, and I think that is establishing a support there. And I think that if you're looking to get into some Salesforce for some really good upside, I think we do end up retesting that 250 mark potentially. And I think that this is going to be a good opportunity to get down on the dip. If you're in this one, might be worth adding to. If you're not, it's also a good point to entry as well for Salesforce.
Number 4, since you said 250, I want to give you a stock that's not $250, but that's $2.50. But before I do that, I want to bring up Stock Watch Sunday. So this stock was featured on Stock Watch Sunday. We go live every week on Sunday at 7:30 p.m. Eastern time, where we talk about the top 5 stocks that we're excited about and they're what we're watching. So if you're interested, give us a like, subscribe, and hit the notifications, and you'll find out about all our live streams. But this week, the one we decided to really bring to the table was a company called Drive Shack, ticker symbol DS. It went above 250 today, kind of pulled back right now. But we've been talking about this. It was like at $1.19, and it's made a move nearly 100% the last month, and it's been wild.
Yeah.
But you and I both think this has incredible upside, far beyond just the 250.
Yep. It
could potentially double next year. Why is that? So let me tell you a little bit of background about the company, how we got here, and then how we're going to get to potentially doubling. So Drive Shack is the main competitor to Topgolf. It is experiential, where it's like the outdoor experience of golf, but it's in a recreational manner. So for us, we think it's the first thing to hospitality to come back that actually benefits off of social distancing, because their model is actually built on social distancing. So everybody that's talking about Dave & Buster, play ticker, get off it, get over it, move on. This is the new play. So if you want something like that, this is the one. And so it went public in 2017. We've seen highs as high as $8 a share. And its issue was really expenditures. So capital expenses to build it. So these companies to build these drive shacks, it could cost 20 million plus just to build it. And the issue around that was, okay, well, it would take 6 to 8 years just to pay it off if it's doing well. That was my issue. That was my hang up with it. Well, they just recently announced in their last earnings call that they are going to build a lower cost model called the Puttery in urban centers. So by the end of 2024, you're going to see 60 plus venues that are either the main drive shacks or the Puttery. And those are going to essentially account for the entire model. But the great thing is they're only at 4, Brad. They have 4 locations as we speak. They're about to open New Orleans. They're about to open Dallas and Charlotte's Putteries. Those are all excited. But for us, it's that long-term growth. We think this is going to come back with a vengeance. It's already really doing that. Yeah. But the upside to this stock is huge. It's a spec play, but we're confident in this play.
Yeah, and let's not forget they came out with news about the reopening in Orlando as well. And it just I think that this is going to be something that it's interesting because we talk about, the recovery stocks, but this has kind of been something, at least golf in general, has been something that people could actually go and do to kind of blow off that demand itch that people have just to get out of the house and go do stuff. This was actually a semi-safe way of getting out with some friends and getting some golf because you're outside, you can socially distance. But I think this is also something where as people are going out and doing more things, this is just only going to continue to grow in popularity. I mean, when you look at Topgolf before the Rona, and it was wildly popular. And so Topgolf doesn't really have a whole lot of competition, but Drive Shack certainly could make a run for it. And if it somehow finds a way to really compete with Topgolf, this should make some monster moves and lots of really good upside. If we're looking at this, 228, 230 could be potential area for pullback. But really, in our opinion, it makes sense to just grab a starter wherever it's at and then start to average in. Dollar cost averaging is probably going to be your best friend with Drive Shack. Now, for me, we'll get to the last one in just a second, but real quick, just wanted to invite you guys over to the Chaos Crew. Now, if you're interested in getting a daily watch list from us, which I do have to say might be biased, but we are absolutely killing it with our watch lists every single day. We have over 1,000 people in the Chaos Crew, and we're actually looking to give away 1 free share of Tesla on Stockwatch Sunday this week if you are a part of the Chaos Crew. So in order to do that, make sure you're hitting the join button next to subscribe. If you can't find it there, no problem. There's also a link into the description as well. For me is going to be, and I know this sounds weird, sounds crazy, and it feels a little cringy to say this, but it's Norwegian Cruise Line. It's one of these things I think that is a little bit more speculative, and we're getting a little bit outside of our comfort zone here because we like to go to the ones that we're just we're going with the best company that's out there. And really, there is no good cruise line company out there. And to be fair, I actually do like Royal Caribbean as my favorite one, but I wanted to grab something that was a little bit more in the middle because I know a lot of our viewers are like, yeah, but we don't want something that's so high priced. And I'm tired of making the argument that that price doesn't matter. So here you go. Norwegian, in my opinion, has that middle ground where Royal Caribbean's the best cruise liner to own, in my opinion. But Carnival Cruise Line is the worst cruise line to own, in my opinion. If we're looking for recovery, we've already seen some. And I was watching the Ravens game, Fat Man Zoom, last week. Norwegian's putting commercials out. So if they're putting ads out and commercials and that sort of thing, then they are expecting people to come back in force to get on cruises, to get out on vacation. That's what they're planning for. And we've already kind of seen a move on Norwegian, but I think that there's definitely more upside here for them as well. Norwegian before the crash was all the way up at $60 a share, which means that we have over 100% upside here still. Now, again, there's a lot of debt that they have to work themselves through and all that good stuff. But if demand really starts to resurge here, and we have a lot of investors that look towards some of these cruise liners and think, well, if there's one recovery stock that I want to be in, why not it be the cruise liners? They've been beaten down so much. So just be cautious about the amount of debt that they have to get through, especially when it comes to that convertible debt. But if you're looking for a nice middle of the road company as far as cruise liners are concerned, Norwegian definitely seems as if it could be a really good bet. And if you're looking for an entry here, some sort of pullback, I think it's right here around this $25 $25 range seems to be where it likes to live. If we see more, positive news as far as the vaccine's concerned, more people flowing in for to want to get on cruises and that sort of thing, more bookings, $25 should be a thing of the past.
Yeah, absolutely. I bust your chops, but it's time to start thinking about these recovery stocks, and don't fall victim to this idea of I'll wait till it comes back. You got to be early. If you wait till it comes back, it's too late.
Yeah.
If you wait till they announce that we've got, 50% growth in business, it's too late.
Yeah.
So it's worth the risk to begin scaling in now. As Brad said, always have a scaling strategy, always have an averaging strategy. And if you don't, another reason to join the crew, because we have videos geared towards this, specifically scaling strategy amongst other topics for videos.
That's right. So that is it. That is our top 5 stocks that we are looking at for recovery. Now, if you guys have better ones, definitely make sure you're leaving comments below. We'd love to hear from you, and also other ideas for videos. We're always looking for ideas and suggestions from all of our viewers and all of our audience. So again, thanks so much for watching. If you guys want to be part of the Chaos Crew, make sure you're hitting that join button. Otherwise, just subscribe and like this video if you liked it. And we will catch you guys next time. Fat Man Zoom, anything else you got for me?
Yeah, I just want to point out, I know there's going to be some people in the chats. Rocket, yeah, it is a recovery stock. You don't need to ask me again. I know. We're going to be premiering this, and you guys are going to be saying, what about Rocket? That's all I got.
Rocket's going to rocket, guys. Thanks so much. Hit that like button on your way out. We'll see you next time.
Rocket dance, baby. Rocket dance.